Okay, so we're going to go ahead and start this webinar off, and we will be talking about a very important subject. That subject is identifying key levels in the marketplace that you need to be paying attention to find major moves. Okay, so let's start off with defining what a key level is. Okay, so a key level is an area that has acted as a support and a resistance. Okay, and it's very important that it's acted as a support and a resistance in the past. Okay, so we're going to be finding this on major time frames to spot major moves that happen in the marketplace and really help us find zones of really high areas that have been overbought or really low areas that have been oversold. So before we kind of jump into the actual placement of the key levels, you need to understand what support and resistance is and have that clarified. So I'm going to go ahead and define that for you really quick. So we have resistance, which is going to go ahead and be an area in the marketplace where the market comes up to it and it has been rejected, meaning it comes up to that area and comes down, comes up to that area and comes down. Okay, that is resistance. It's kind of like a ceiling. Okay, now we have the other area that we're going to be looking at, which is going to be our support. Okay, so support is going to be at the bottom. It's going to be low areas, comes down, bounces up, comes down, bounces up. Okay, so it's going to be from the bottom. Okay, so every single time frame that you look at, whether it's the 4-hour, the daily, the weekly, the monthly, the 2-hour, the 1-hour, even the smaller time frames, you can find areas of support and resistance. If we just look quickly, we can see that there's some support right here, right? Came down, bounced up, came down, bounced up. We could see that there's definitely some resistance right here. We see that the market came up to this point one time, came down, 2 times, came down, okay? And then we can see, there's areas of support right here. We have all together, it went a little bit past it, came up, came down to this area, came up, came a little bit past it, came up, okay? So we could see this throughout the entire market, and we can keep on doing this. Now, what a lot of people kind of get stuck in is looking at these lower time frames and just seeing like, oh, is this, major area of resistance, major area of support? And, there is support and resistance right here. And we can actually see the market going through this area right here. And this is actually called consolidation. But is it a major area? And that's something that you want to be aware of to find these really big opportunities and moves. And that's why we find key levels. So I'm going to go ahead and remove this drawing tool. And we're actually going to go ahead and look at key levels, okay? So the key to key levels is major areas, okay? Major areas where major moves have been found before. So that's why we want to go ahead and go to our higher time frame to find these major key levels, okay? So when I look at this, I like to look where price is at. So price is right here. And I like to kind of look at areas that pop up to me a little bit above and below it. And when I say a little bit, above and below current price to kind of see what is the major level that stands out to me. And just by looking at this, I do see that we have a major area up top that has been rejected. And we have definitely some support right here as well. And it looks like this was definitely a huge rejection, meaning, when I say huge rejection, meaning like, look how far price went when it came down to this level right here. So it came down to this area. This acted as a support, and look how far up it came. If we actually take our ruler, we can actually see how big this rejection was. And it was 900 pips, okay? 900. This is a huge move, okay? So you want to find areas like that that have huge moves. Right here at this area up top, we could see that when it came up to that area, it dropped about over 500 pips each time it came up top here, right? So like we see it came up, bounced down, came up, bounced down, came up, bounced down. This would actually be a 900 drop, came up, bounced down another 900 pips. So, I'm looking at this and just kind of getting some awareness and just observing, okay? Sometimes you're going to see things that really pop out, and that's going to be perfect. And other times you're not going to see something. So don't force it, okay? So I'm going to go ahead and actually go to my line chart. This is how we do it. We go to our line chart, And I'm basically going to go ahead and grab my horizontal line tool, and I'm going to look above price and below it. So above price, I see this area, right? We can see that it's been rejected there multiple times. I'm going to go ahead and make this green for weekly. And you want to get in the habit of labeling your different time frames the same color, okay? So we have green for weekly. This is going to be a weekly key level. Nice. So I have a weekly key level. Now I see it acting as a resistance. Now remember, we need a resistance and an area of support, okay? So I'm going to go ahead and go to the left. And I do see some support right here, some more resistance right there. And I do see some major support right there. And I like to kind of get an idea of like, you want it to be a major move. So this moved up, it came down in this area and went up, 450 pips, right? On that rejection. So that's a decent rejection. And then we could see it definitely has acted as a resistance before. Check this out. It went up to this area and eventually dropped over 3,000 pips, okay? So this is definitely a solid area to look at. Now I go ahead and place my weekly key level, and I see that, we have it doing these three scenarios, okay? These are the three scenarios on your line chart that you wanna see. The first one, we call it a tap. And that's when price goes directly to your horizontal line. Okay, this is gonna be called a tap. Okay. And let me go ahead and actually point this out for you. So that's when the market hits it exactly, okay? So let's see. Right here, we want to, remember this is a zone. So like if I put it right here, that's going to be a perfect tap right there. And you want it to be, if you're going to look for a tap, you want it to be from both sides that it does it. So I see a tap there. And let's see. I do see a tap right here as well. So that'd be an example of a tap, okay? Okay, so this one does do a tap, and you want your area to do at least one of the three things I'm about to show you right now. So the first example is it can do a tap where your line chart goes exactly to your horizontal line. The second thing that can happen is what we call an overlap, and it's not going to be like it's going to be just barely over your line, okay? It's going to be an overlap. Okay. And the third scenario we can have is going to be a gap, okay? And that's going to be where price doesn't quite get to that line, but it just has a small gap. So in this one example I found right here, we can actually see that there is a gap right here, right? Just a small little gap, okay? I do see that we do have, let's see, a small overlap right here, okay? And they don't have to do all three of these things. I'm just pointing out that I'm seeing this happen all in this one example, okay? So I see that we do have a small gap right here. And let's see, this overlap right here, it did overlap here. Ideally, you'd want it to be a little bit smaller like this, okay? And at the end of the day, what we're looking at here is zones, and most importantly, we just want to kind of make sure that we have a solid zone. So I'm going to go ahead and just remove all these drawing tools. And you're going to want to go ahead and make sure that you have this copied down in your notes right here, these three scenarios. So we have gap, overlap, and tap. Remember, we're going to be using this on this time frame as well as our daily time frame to find major key levels, okay? So tap, overlap, and gap. I'm going to go ahead and just check really quickly. I'm going to go ahead and check and make sure on my candlesticks. And I want to make sure that this horizontal line that I drew, it just lines up with price. So I see it's definitely lining up right here. And I see that it does line up right here. Okay, good, looks solid. I see that it went a little bit below, that's fine. It's still acting as a major area of support, definitely some resistance. So this looks good. And here's what I like to do, and I would like for you to do, is really understand the significance of the areas you're marking. And to do that, actually look at what you marked and observe. When I look at this right here, I see just in this one zone, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks right here where price came to this area, you know, almost 4 months where it came directly in the zone and was rejected. And even this right here, like if you really look at like how close this got, 1, 2, 3, 4, 5, 6, another 6 weeks, you know, that's 19 weeks that it got into this zone, because this is a zone, and was rejected 500 pips. So, you know, that's months that it's been rejected at this price. Do you think we'd want to pay attention to this area the next time it happens? Absolutely, right? So now we're going to do the exact same process below price. Now, below price, price is right there. I do see this area immediately that it's at. This would be directly where price is at right now, a little bit below it, okay? I see this area and it was a major rejection, okay? And then the other one that pops out to me is also right here. Now, I'm gonna go ahead and check for both these. Now, one thing people ask is, you know, Nick, is this something where you're only getting 2 areas? Well, you wanna find areas above and below price that are relevant for you to actually take in mind for trading, but you might have, you know, 4 areas, because if price breaks through this area, we'd be looking at our next key level zone, okay? So take note of that. So I see this area price is at, I see it, I definitely acted as a support, even have like a little gap right here. Now I need to see if this area is acted as resistance. Now I do see an overlap right here. I see some more support right there. I see an overlap right here. I see an overlap right here. Okay, okay, it kind of went and consolidated through this area. So I definitely do see some rejections. I see some more resistance right here, some good support right here. So this price has definitely reacted before, and this is on a weekly time frame, so there's a lot of data. Now, this hasn't been rejected as many times as this first key level that we marked, but it has been significant, okay? And we do see that it's reacting multiple times. So I'm actually gonna move this up a little bit. I'm gonna check it out on my candlesticks and see if it has went, and we can actually see that this area has been rejected multiple weeks right here. Let's look back in the past. Price went a little bit above it there. Okay, see that it's acted as a strong support. Okay, support. Okay, so this area has reacted with price. It's not as solid as the first area that we marked, but it's still a key level, and price actually did go ahead, and it looks like it came all the way down to this lower level and then closed above it. So let me go ahead and go back to my line chart. I'm actually gonna look at this lower level. So I see definitely a large rejection here. Let's see, I look to my left, I see we have a little overlap right here. And okay, I see a little overlap right there. Let me keep looking. Broke here, definitely some strong support right here. Okay, a lot of support, some good resistance right here. Okay, so I'm actually gonna go ahead, and the areas that stick out to me the most are gonna go ahead and be this right here, as well as this right here, okay? So that would be, let's go ahead and look at candlestick. This would be a gap, and we see price did hold up here. It did go ahead and get into this zone right here. Let me go back to my line chart. Let me go ahead and look at this now. Okay. So I do see this area that was rejected here. I see this area as well. And if I look at price, it is holding up at this area really well. And take your time with this, okay? You're really looking for major areas of support and resistance. So I'm gonna go ahead and keep both of these in mind and kind of just get some reality of how many times it was rejected at this level. So I see it's in the zone 1, 2, 3, 4, 5 weeks. Went a little bit above it right here. I see another 1, 2, 3, 4 weeks right there. Okay, so that's already over a month right there that it's reacted at this price. So I'm gonna go ahead and take that into consideration as well, okay? Okay, so this is on my weekly time frame. Now I'm gonna do the exact same process on the daily time frame, okay? So I'm gonna go to my daily time frame, and I'm basically gonna go to my line chart, and I'm gonna go ahead and look above and below price. So above price, I'm gonna see what areas stand out to me the most. Okay, so I see one really strong rejection right here, and I see some solid support right here, okay? That stands out to me the most. Let me go ahead and look to my left and see if there's any other times that price reacted at this level. Okay, I see some good, strong rejection here. Let's see how big that drop was. Okay, over 2,000 pips, okay. Good, okay, good. So I definitely have enough data right here, so I'm gonna go ahead and go back to my candlesticks. And like I said, you want to get reality of the area you're marking and kind of see, is it holding up on lower time frames, and really kind of see, is it actually, you know, on candlesticks, is it lining up? So I see some strong rejection right here, a few days. So let's see what we got. 1, 2 days, 1, 2 days, 1, 2 days. So that'd be 2, 4, 6, 8. Okay. So I see that price is definitely reacted right here as a support and a resistance. And it's broken through it and came back up to retest it, which is also a good sign, okay? Good resistance right here, acted as a support right here. Okay, so I'm gonna go ahead and count this area as valid. And right now I'm going through this, but when you guys really mark these areas, like actually count how many days or weeks each key level has been respected, and that's gonna kind of give you some significance with that key level and understanding, you know, when you find a trade setup in that area, how strong it is, okay? So daily key level. Go to mark these ones up. So this would be a weekly key level. One question I get asked is, hey, would you be more, are you looking for one more than the other? And the reality is weekly key levels have more data in it, so I do go ahead and give that a little bit more significance. But at the end of the day, finding these key levels is something that, you know, you're going to get better at over time. And the main thing to look at is how big are the rejections that happen at these key levels? Are they big rejections? Or if it's just small, that's one of the biggest things that people fall into, is they find areas where there's small rejections. You could see this, you know, just looking at this, the market's moving in between these key levels that we marked right here, okay? So now we found our key levels. So this is how you do it. You go to your line chart, you go back to your candlesticks, and you make sure that it's lining up. And below price, you know, you'd also look for a daily key level. Now, the reason why I didn't mark one right now is because I have these 2 weekly key levels that I see it's moving through really well. So depending on what I see, if I saw an area that stood out to me right away, like I do see this area right here, but ultimately it did go up to this weekly key level, okay? And, you know, I do see that, but nothing's really sticking out to me. Like right here, this stood out to me, and there's a little bit more room in between these weekly key levels. So I'm not trying to force and have, you know, it has to be a key level above and below price, or it has to be this or that. It's just what is actually happened in the past and observing it and just kind of putting it as is, and then really finding those significant areas. Okay, so now we move into the next step, which is, what do we do at these key levels? What does this mean for us trading? Now, to understand how to trade these levels, you need to understand market structure. So I'm gonna go ahead and do a recap on that quickly, okay? So we have our weekly and daily key levels. I'm gonna go ahead and do this and mark market structure and put these concepts together. So in an uptrend, we have market structure printing higher highs and higher lows. So I'll go ahead and label that for you. HH for higher high. And this is communicating that each high point is higher than the previous high point. And that's what we look for in an uptrend. And we also see higher lows, okay? So HH for higher high, that's gonna be HL for higher low, okay? Now, which time frames are we looking for market structure? Primarily the 4-hour. I like to see the overall true direction of the market, but you can also go ahead and check out the hour time frame specifically on key level setups at these major areas. And I'll kind of connect the dots here in a bit. So this is market structure. You want to be able to identify this, and this is going to be a key concept to trading these key levels. So we have an uptrend market structure, and then we actually have downtrend. That's when the market starts to print lower lows and lower highs. So that's a lower high because if you look at the previous high, it's lower. So this is what we want to see generally in an actual downtrend, okay? Okay, cool. So now how do we place this together with the key level? This is how it ties together. This actually shows another bigger concept, and the concept is a break of structure. A break of structure is when the market actually goes and shows and communicates to us that the market's now transitioning from an uptrend to a downtrend, okay? And the actual break of structure happens right here. So we see the market breaks structure and prints a lower low, comes back, retraces, and retests this area, and this would be where we look for our entry opportunity. So think with this concept, a break of structure and market structure. So we can find this with these key level setups on the hour, 1 hour, and the 4 hour time frame, okay? 1 hour and 4 hour time frame, okay? So check this out. Let's just say we have a key level, and this is one of our weekly key levels, and it's up here, right? And let's just say this is a weekly key level. This is one of the most, in terms of probability, this is a really high probability setup that happens at these key levels. So we see, let's just say market structure is coming up, it comes up to a key level, goes a little bit above it, but then we see this break of structure and it communicates we're heading into a downtrend. And more importantly, we're at this key level that's been rejected X amount of days before, X amount of weeks before. So this is how you combine these concepts. Now, there's a ton of different variations and setups. And if you've already subscribed to getkeyLevels.com, then perfect. You can go ahead and see some of those different trade recaps and different setups. But for right now, everyone else, I want you to focus on this setup right here. It's a very high probability setup. So we can see how that would play out and add 2 pieces of data to find a setup. Now, if we actually look, and let's just say hypothetically, this is our key level down here, and we actually see, let's just say we see the same concept happen, but it's coming from a downtrend, and we see that market prints lower low, lower high, lower low, and then it bam, it prints a higher high. That's communicating, when this does this, it's a break of structure and it's communicating that we should potentially be looking for buys, and we see the market prints a higher low. Now we have that retracement, a break of market structure, and we use our different tools to find these areas and actually find our ideal entry, right? And all of that's in the course with price action, Fibonacci, and these different strategies. But I want you to get this bigger picture concept to see how do you use key levels with market structure. So we have a break structure, and go ahead and do something like this. Now these are 2 variations right here. Another variation with market structure is, approaches the key level. Maybe you see some consolidation. We want to make it, kind of like break and see a break of consolidation, retracement, and that would be our selling opportunity. And this is another setup, and this would also be considered a break of structure. The same thing can happen from coming from a downtrend to an uptrend as well, okay? So this is the concept. Now let's actually look at this and apply this information and see where has this happened in the past and find a few examples. And this is what you guys want to do, is get these examples and kind of be more aware of, hey, how can I find this setup in present time? So let's actually look at market structure. I'm on the 4 hour, but like I said, you could find this on the 4 hour or the hour, okay? So let's actually zoom in here. Okay, so let's start with this example right here. So we have the market. This is on a 4 hour time frame. It's printing higher highs as well as higher lows. We can see the market's doing this. Higher highs, higher lows. This is an uptrend market structure. We approach our key level. Now, when the market's approaching the key level, I become my attention units are the fact that, hey, we're at this key level. Is it going to be rejected? If it's going to be rejected and it's going to act as a resistance, I'm going to look for a sell. If it breaks through, and I actually saw this acting as a support, maybe it does something like this, then I'll go ahead and look for buying opportunities, right? So right here, I see that we print a higher high, we go ahead and print a higher low, and we print a lower high a low, lower, high. Okay, this is all communicating now that we could be entering into a downtrend. And then finally, we have a clear break of market structure. And then we actually have a drop to the downside. Okay, that is an example that we just showed with this, this concept put into play. Okay, and this is on the 4-hour time frame. So now we see, let's go ahead and look at this next area. We see the market's printing higher high, higher low, higher high, higher low, prints a high. Okay, we're approaching our key level again, higher low. And then we actually see the market comes up to the key level and it's rejected again, okay? Okay, awesome. Then it goes up, rejected again, comes up, rejected again. And this is all communicating that this is acting as a form of resistance, consolidation. Now we want to go ahead and see a break and retest, okay? So we actually see a break, retracement, and this would be our entry opportunity right here, okay? So we could see the same exact, it's a variation, but it's a setup that happened at these key levels, and there's a ton of them. So, these are very high probability ones you can find. And like I said, you can even see this on the hour time frame. So let's go ahead and see potentially what that might look like. So we have this key level that it's at down here. Let me actually go ahead and go to my hour time frame. And we actually can see on the hour time frame, it moved between these key levels, and it actually did start to go ahead and give us higher highs as well as higher lows. Now, in the bigger perspective though, and this is why, you got to be a little bit more skilled to take these entries off the 4-hour, off the hour, is you got to have the awareness of where is overall market structure. And even though that was at that key level right there, and it did start to kind of print higher highs and higher lows on the hour, in the grand scheme, this was still a downtrend market structure in the 4-hour. So you could trade it with that on the hour, but also keep in consideration the 4-hour time frame, okay? So these are a couple of different examples that played out at these key levels. Let's see, and you can add this different information and data together. So for example, even right here, let's just say we see our daily key level. The market's kind of like in this phase of consolidation, prints a high, higher low, and breaks. That's communicating to me that this key level was respected, and then it started to go ahead and give us uptrend market structure. So you could see how you could play market structure, whether it's breakage structures or if it actually breaks through it, you can actually take that in consideration. Right here, it actually did the same exact thing. Overall, printing a lower low, and this lower high actually went and tested at this daily key level, and that could be an added selling confirmation, okay? So with that, that is the overview of the daily and weekly key levels and how you can go ahead and look for market structure in these areas to find really big moves and huge opportunities in the market at major areas of support and resistance. With that, this is Nikk Legend, and remember to always be great.